87% of Bitcoiners hold other crypto asset. I'm going to use that statistic anyway to prove my point. It's not necessarily about creating another siloed Bitcoin ecosystem. Hopefully, soft forks of Bitcoin with OPCat that will actually allow for fully trustless bridges. There is no trustless way to actually go from Bitcoin and trade your Ethereum. If it doesn't evolve, it's a huge missed opportunity.
Eventually, they will have a come to Jesus moment if they don't allow this to happen.
All right, thank you guys for bearing with us, especially in the heat today. I mean, I just walked over and was like completely drenched. So thank you also to our great panelists. We'll do a brief round of intros. So I'm Jay. I'm a junior partner on Pantera's team, focusing on research and investments. So I look at a lot of our infra side deals. I come from a research background at Stanford.
I'm Clayton. I'm the head of ED at Babylon.
Hi, everyone. I'm Dylan, ecosystem lead at the Starknet Foundation. Starknet is a validity rollup, L2 on top of Ethereum. For the purpose of this discussion, my role is to talk a little bit about how we are going to be the first L2 to settle securely on top of Ethereum and also Bitcoin. So great to be here. Stupid move on my part to be wearing jeans, but this is what I've done.
For the style, you know? But yeah, so I guess my first question, our title is taking Bitcoin everywhere. So I'm curious, what does that actually mean to you guys? What does it mean to have like Bitcoin everywhere and having that like distribution out there?
Well, you probably just went on Starknet, right?
I'm sorry, what was that?
You probably just went on Starknet, right?
Yeah. I mean, look, it's a gigantic opportunity. It's
sure, yeah.
Massive latent demand.
I mean, we have our own chain as well, but I mean, I think really, right, like you haven't had non-centralized wrapped versions of Bitcoin being issued at scale because there wasn't a way to do it properly from a security perspective. I think even if you're talking to like Fidelity or BlackRock, right? They've obviously done their due diligence on UTXO transactions, and that functionality that exists on Bitcoin today is fairly accepted, like in a broad range of like LST issuers as well as people that are much more buttoned up, and then you can effectively lock that Bitcoin and then issue it anywhere you want, right? So. That obviously the connections become important. Is there a base place where that asset does get issued and does it get bridged beyond that, or is it a generic bridge that like connects to all of these things? Obviously that adds additional complexity, but at the end of the day, like every single person in this room is someone who probably has Bitcoin or should have Bitcoin, and every single protocol wants that. As this base digital gold, right? I mean, when you have like a lot of velocity in this industry, the one thing that becomes like less volatile, which is like kind of funny because Bitcoin is extremely volatile still. That's like a safe haven like sort of asset that you want or demand as an ecosystem partner or like the CFO of a foundation, right? It's like. And so I think we're at a point now where like there's a lot of technology that exists that is safe enough for those people to want to issue Bitcoin on their chain.
Yeah, I'll just lay the stage a little bit. Bitcoin and Ethereum are the two largest crypto economies, period. It's a massive opportunity to combine and unite the two in a way that we're kind of envisioning it at Starknet. And just some numbers. Bitcoin's what, a $2 trillion asset right now? It's 20 million Bitcoin. So yeah, $2 trillion plus right now. 98% of Bitcoin is held idle and is unproductive. That means less than 2% has actually been bridged outside of Bitcoin. And less than that is used in DeFi. It really is just a massive, massive opportunity. We also know that there is demand for productive Bitcoin real-world use cases. We've seen that in centralized entities with BlockFi and Celsius that ultimately collapsed and harmed users. We also know that 87% of Bitcoiners hold other crypto assets. Now, that doesn't account for the whales that hold a lot of Bitcoin, but I'm going to use that statistic anyway to prove my point. It just is basically proving that there is a ton of demand for a decentralized, secure, self-custody type of way to actually get action and make sure that there is real-world utility on your Bitcoin. And that's all we're doing. We're just creating the right bridges, going from trusted bridges with Atomic, Garden, with bringing wrapped Bitcoin onto Starknet to trust minimized bridges with BitVM, and then hopefully, this might cause some issues in the crowd, but hopefully soft forks of Bitcoin with OPCat that will actually allow for fully trustless bridges, which would allow for verification of Stark proofs on the Bitcoin L1. So that's what it means to me. It's a massive opportunity. And frankly, as Clayton was mentioning, Bitcoin is Bitcoin. Like it's awesome. And extending its utility is extremely important.
Yeah, so I know that we've been talking all day about basically how do you actually extend the EVM beyond just Ethereum. And so I'm curious on your takes on why are you guys maybe converging on EVM as like a solution to Bitcoin scaling, especially when you have a lot of these, I guess, more Bitcoin native solutions out there, whether that be through like a UTXO model, through Stacks, through all of these other ones, or like through Cairo or some of these other languages. So why EVM?
I mean, outside of just the amount of developers that are already leveraging it and are already comfortable with it, especially if you're talking about Bitcoin, right? You're talking about a certain class of holder that has probably actively been researching this space much more than you think they have, like for the past 10 years. Like Fidelity's research team is 500 people. BlackRock's research team is 500 people. They've done more research on the EVM than any other programming language that exists in crypto. So if you can remove unnecessary hurdles and implement a tech stack that they're already comfortable with, it just moves those people much quicker, right? So then they're just trying to validate, the business opportunity, right? Like, do our customers want this? Is this something that's going to make us money? Any sort of due diligence that someone like that has to do on the tech side just makes it much more of a slow drog. And that drug is already going to be slow compared to how degens onboard to new things. So the EVM makes sense for Bitcoin. If there's another solution, I would love to see it, but I don't see it having as much adoption. Yeah.
It's a good question. I'll take a step back. Most chains don't care about settlement. Period. Bridges are usually pretty okay, and I would say that there's probably a few chains out there that actually care about sovereignty and security. Two communities. Those are the Bitcoiners and the Ethereum community. So, what do I think is the important thing? It's not necessarily about creating another siloed Bitcoin ecosystem. It's about taking the two largest crypto economies and unifying them and creating a unified Bitcoin, Ethereum ecosystem. So why would Bitcoiners actually get value from being part of the Ethereum world and vice versa? Well, I think it's pretty obvious. Besides the stuff that I was mentioning before, just in terms of the fact that it's completely idle, it's not being used right now, but it's really just immediate liquidity to access to liquidity associated with stable coins and a burgeoning DeFi ecosystem that is on Ethereum and Starknet, battle tested for years. And I think that's kind of like the key reason for bringing Ethereum and Starknet to Bitcoin and bringing Bitcoin to Ethereum and Starknet. I think to summarize my point here, it's really showcasing that our goal is to really be the execution layer, a single execution layer for that verifies and are settled properly on Bitcoin and Ethereum with a dual finality. So practically, this means that users can atomically compose interactions with assets and information from both Bitcoin and Ethereum. And that creates this whole unified ecosystem that I think will be extremely necessary and important for the future of crypto.
Yeah, that's super interesting. So I think when I think about Bitcoin DeFi, what I think about is basically around this time last year, there was this huge hype around ordinals. And basically all of these, they were like clogging up a bunch of these chains and stuff like that. But it's been a year, and it seems as if a lot of this has progressively died down. So I'm curious on kind of your takes on where we are actually at in terms of the Bitcoin DeFi ecosystem, and how do we grow the pie from here?
I mean, I think we're in a position now where you don't necessarily need to settle on Bitcoin to be a Bitcoin DeFi protocol, right? I mean, at least like the approach that we've been taking, right, is like, this locking functionality exists. We can use that for, asset issuance and providing security to other chains. Obviously, like, we would love to settle, at scale a bunch of exotic transactions on Bitcoin, but that becomes like a conversation that you want to start having as like the Bitcoin core community 10 years from now. I mean, people were talking about the inflation not being able to compensate miners, and then the price keeps increasing, and that conversation gets pushed away. I mean, eventually, like the amount of Bitcoin that gets issued, you need to start thinking about like having more transactions outside of send and receive that can get settled on Bitcoin, right? That's like obvious, but you don't necessarily have to settle Bitcoin transactions on Bitcoin, right? Like you just want to leverage Bitcoin in a place that can accept that flow, and I mean, I think like even like Hyperliquid is a great example, right? Someone that's like focusing on like spot Bitcoin markets on chain, it's like a huge opportunity. If you're looking at like SexDex volumes for certain assets, right? Like 95+% of Bitcoin is traded on centralized venues. There's obviously a market for that for other tokens. So like you just need to have a very familiar place, like do those trades on a decentralized network, and that network's going to make a shitload of money. And I don't think they necessarily care that they're settling on Bitcoin. They haven't been able to settle those transactions on Bitcoin ever anyway. But it's a most traded asset, likely forever in crypto. But eventually, right, people will want that once it exists. But I don't think we're there yet.
So, I mean, like, just to jump in here, are you basically just saying that we're only treating Bitcoin as like an asset rather than leveraging any of its security properties underneath? Or how does that, like, or that decentralization existing, how does that come into play here?
Yeah, as an asset, right? I mean, the whole point of Bitcoin security is that like no one can take the Bitcoin out of my wallet, right? So there is like a trust aspect to it today, where if I do want to do something, I have to lock it, do something. But like as long as it's represented and there's guardrails in place, I'm comfortable with that. But there's not been a product that allows Bitcoin settlement today at scale.
Yeah.
I think Clayton echoes a lot of my sentiment as well. But Jay, just to specifically go back to your question and your example of ordinals. So the taproot changes, allowing ordinals, people playing around with just how you can alter and change some things on the Bitcoin L1. Who here actually has an ordinal and has paid ridiculous amounts of transaction fees for it? I mean, I own a ton, and it's not fun, okay? So what if you can, let's take a token on Bitcoin L1. You can collateralize that and actually bring it to an L2, like Starknet, with an asset-backed collateralization, and it's one-to-one, and actually be able to trade it in size, at much cheaper costs. So I think it kind of goes back to the question of, what is Bitcoin? Is it a monetary store of value? Yes. Is it an electronic cash peer-to-peer system, which is the other goal of Satoshi? Also should be yes, but is impossible right now on the Bitcoin L1. So my thought process isn't necessarily changing up the monetary store of value, but it's evolving the use case. And I can get deeper into that if you'd like, but don't want to take over
for
the
sure.
conversation.
Yeah, I guess it was also like my next question there was also if you think about the reason why a lot of people would want to stake on different networks, say stake their Bitcoin and stuff, it's to earn yield. But then my question would be, where does the really sustainable sources of yield actually come from, especially within the Bitcoin DeFi ecosystem?
So just real quick, I think people do really want native Bitcoin staking, and it's something that we are going to be launching hopefully in the next quarter as well. Naturally, Bitcoin is a less risky asset than Ethereum. It's a less risky asset than your fart coin probably. At least I would think it's a little bit less risky. So naturally, the yield for a less risky asset is not going to be as high as, let's say, staking fart coin or something like that. Farcoin is a very safe asset, in my opinion. So just the reality is, like when you're actually thinking about staking for Bitcoin, it's not the same type of, it's used for the same security of the existing network and so on and so forth. So like we're using Bitcoin to actually satisfy and help secure the Starknet network. But it's a little bit different because it is a less risky asset. So when you're thinking through like the formulas associated with, how do you actually, what percentage of it is actually getting secured on the network, and how does that actually impact your staking rewards and your incentives? It's a very different mechanism. It's a very different type of calculation because it is objectively less risky.
I would love like a diagram of like the pros and cons of Bitcoin staking versus Farcoin staking, and then like we distribute it to like an institutional investor newsletter or something. But I think staking is different for Bitcoin because you can't do anything with Bitcoin on the base layer unless you lock it and have it represented somewhere else, right? I mean, if you're thinking about like ETH and then like the conversion to stETH and DeFi, it's like it naturally converged over because there was a reward rate attached to it. But there was always the option to like trade or pair an asset with ETH until like stETH proliferated. You can't like just have like unstaked Bitcoin or unlocked Bitcoin represented anywhere unless you're going through like CBBTC or WBTC, but that's so like locked off chain, effectively. So I think the reward rate matters less from a DeFi perspective, right? Like people just want Bitcoin elsewhere because you can't do anything on the Bitcoin network. And if there's a reward rate attached to it, that's naturally going to be the asset that converges as like the dominant DeFi asset that gets used. But I think the reward rate is an afterthought.
Okay, yeah, that makes sense. Of course, the elephant in the room when it comes to a lot of these Bitcoin, especially within the last 2 years, has been this growing role of traditional finance institutions, all the Wall Street giants coming in, launching ETFs, becoming more excited in the crypto ecosystem, but in particular in Bitcoin. So what role do you see institutions like more traditional Wall Street type institutions playing within the Bitcoin ecosystem in the future?
There's a reason why institutions are picking Bitcoin. It's because it's the largest, safest, best store of value. So I mean, the role of institutions is they're going to want to have access to Bitcoin yield. They want to use Bitcoin as a investment, and they want to make money off of their investment. So, I mean, I think just the role of institutions, they're going to continue to find ways to leverage Bitcoin, not just as an investment, but also for their own business models too. And think about how you can bring Bitcoin into payments for their own network or their own system. So yeah, I'm pretty excited for it. I mean, it's cool because I think it'll open up a lot of different opportunities within crypto to the real world to an extent. But I also, have my own thoughts on just having institutions come in to play around because they don't care about the same level of decentralization. They don't care about the same level of security as, maybe not security, apologies. They don't care about the same level of decentralization as a lot of people in this room probably do. So it's a fine mix between, the access, the capacity, the supply, the demand from it, and what the core ethos of Bitcoin actually is.
It's also classified as a commodity in a lot of nation states now, which I think is a huge differentiator. But I mean, like all of these institutions are actively, not all of them, but ones that can or want to, are actively doing all these things off chain already. Like they're already lending it out. They're already like doing the standard basis trade. They're like already borrowing it for stable coins to do something else. Like like Bitcoin is the most pristine collateral for both retail and institutional. And I think they will participate on chain if the rails are in place for them to do so. But they're already actively doing it. They're doing it on platforms like Galaxy and Falcon X and Coinbase, et cetera.
So is kind of like the vision there basically becoming like a competitor or a more decentralized competitor to something like a Galaxy or to something like that? Like where do you see like the future of like your own protocols playing in that role where we have increased institutional demand for Bitcoin and doing things with Bitcoin?
Well, I think it's less competing with their already existing products and more just like if you do this this way on chain, like your distribution just 10x's, right? I mean, that's the same way that like anyone decides to start like pooling capital on chain, at least at the institutional level. So it's not like if you build it they will come, but like they want it, so to speak. It just doesn't necessarily exist today for Bitcoin.
Nothing really more to add to that. I think that's a good answer.
Okay, sure. Yeah, I'm also curious on some of the controversies within kind of the Bitcoin core dev teams and stuff like that. One of the biggest ones, of course, is OPCat. And I know that it's a very opinionated debate on both sides. So I'm curious, what are kind of your perspectives on the OPCat debate and how you guys are thinking about navigating these sorts of fractures within the Bitcoin core community?
Yeah, so I think just very succinctly, the goal isn't, I don't think we should be changing, Bitcoin as a monetary store of value at the base layer. But that doesn't mean it shouldn't evolve. If it doesn't evolve, it's a huge missed opportunity. And expanding the utility of Bitcoin is something that opens up a ton of doors and a ton of opportunity and a gigantic market. So we believe its utility and use should evolve. It just should evolve on top of layers on top of Bitcoin. So things that are built on top of Bitcoin. And as I was mentioning before, the L1 just doesn't scale. It's slow, not fast. It's slow and expensive. And so it needs some type of L2 or some other type of chain that actually provides the right scalability and the right user experience to make these grand ideas of an electronic peer-to-peer cash system actually relevant. So as it relates to OPCat, it becomes a question of, are you kind of pushing yourself towards Bitcoin maxi, the traders, the people who really want to see Bitcoin evolve, or the people who don't want to see Bitcoin evolve. And it's a very different mentality of just how you approach the community. I think there's an element here where you can obviously tell where my bias is, but it's a very difficult scenario to be able to communicate with some people that have very, very strong opinions. And frankly, the amount of wealth that has been created by Bitcoin forces these opinions to be very strongly held. So yeah, it's just a fun little path that you have to take.
I mean, a store of value asset is a store of value asset because it's secure, right? So I think to the point I was making earlier, eventually Bitcoin is going to have to think about getting transaction fees at scale on the layer one. There's three ways to incentivize security in crypto generally. One is to inflate the token more. That's not going to happen for Bitcoin. That completely devalues the entire reason for its existence. The second is to increase the price of the token, right? Which means like creating more demand for the asset, which is something that we can do now if we can issue that asset and venues that can take in that, exotic transaction outside of send and receive. But then the third is like just getting more transaction fees, right? And I think that's like the most sustainable model for Bitcoin in the long term. But it doesn't seem like that's going to happen anytime soon. So if you really care about like maintaining Bitcoin's value proposition, you should be creating more demand for Bitcoin by building around Bitcoin DeFi.
I'm curious on what you think should happen at the base layer, and what do you think should happen on the L2 layer in terms of the innovation?
I mean, it's benefited them from being really, really slow, right? So maybe I live in America, so maybe I'm like a little too fast for the scale that I don't know. It just feels like more of like a Fed sort of policy decision making that like I'm not super like into, but at the same time, it's like that's what needs to be for that asset. But eventually they will have a come to Jesus moment if they don't allow this to happen, right? Because like the inflation will run out.
What I was saying before, L1, monetary store of value, L2, everything else.
Okay. But I think like one thing that we've seen in the Ethereum ecosystem, at least, is this intense fragmentation. And what you end up with is all of these mini L2s, and no one just really cares about the L1. And then in the last 6 months, like the Ethereum Foundation has gone to great lengths to realize this and try to bring everything basically around again. So how do you think about like that fragmentation of liquidity, of user experience, of all of the things that we've seen in the Ethereum L2 basically process, and what can we learn from that?
I mean, I think it's super problematic for institutional adoption as well, right? It's like you're going to like all of the like. There's no standardization on Bitcoin scaling at the L2 level as well. At least when you're looking at L2 scaling for an institution now, it's like, do I pick like OP or Arbitrum? But those designs are fairly similar. Like they're both optimistic rollups. But if you make one decision on a Bitcoin rollup, you're gonna like wait a year and see like how much monthly recurring revenue I made from making that decision, and then be like, do I go through this fucking new process again for a new tech stack or not? So the first one has to be really, really, really good. And if it's not really, really good, it's going to be a huge problem for that adoption that people have been yearning for. So without standardization, right? Because like if you can rinse and repeat, maybe a new team, a new product roadmap, someone that's like capable of shipping something to the market, but leveraging the same tech, then it's a much easier decision for someone.
There are a lot of L2s on Bitcoin. It's just they're not very good, or they're not trustless. I think there is concerns associated with how you do some of these wrapped Bitcoins, or just generally the bridging involved is difficult. A true rollup on Bitcoin is extremely difficult, especially if you're doing it from Ethereum. You need to have proper dual finality, verified on Ethereum, verified on Bitcoin, that prove the state of whatever that rollup actually is. It needs to be self-custodial. There's a third one. I forgot what it is, the specific term, but it's not easy, okay? Like there's an element why like having a proper trustless or as trust minimized as possible bridge between Bitcoin and Ethereum or Bitcoin to Bitcoin itself is extraordinarily difficult. So I actually think that L2s on Ethereum are also difficult to make too, but I think it's a very different scenario of, what Ethereum and Ethereum Foundation has struggled with their L2s, what Bitcoin is struggling with their L2s, and what a Bitcoin to Ethereum L2 would actually be. So I think it's a very different scenario to be thinking about because it hasn't been done.
Yeah, that's fair. I guess like the technical difficulties involved are a scale of magnitude higher because you have all of this tech that's just been there for the last 10 years and the community just doesn't want to change it or anything. That's the hardest thing to work with. So yeah, I think before we wrap up this panel or like open up to audience questions, my last question to you guys would be, where do you guys see the Bitcoin, where do you guys see Bitcoin in, let's say, 5 years' time? What will the ecosystem look like? If we were sitting here in the next 3 to 5 years, what would that look like?
I would like to see Bitcoin represented as an asset the same way the majority of other majors are represented in DeFi. I think that's a huge business opportunity for a lot of people as well. I don't know if we get to settlement by then. But yeah, I mean, if you're looking at, to your point, it's like $2 trillion market cap token versus $1 trillion of other tokens. It's extremely large opportunity for someone who can build it correctly.
Another great answer. I don't know. I'm hoping that the future of Bitcoin is different than what it is right now, just because there is no trustless way to actually go from Bitcoin and trade your Ethereum. I think the only way to actually properly do that is, you have your Bitcoin on a ledger, you have your Ethereum on a ledger, you meet in person, and then you trade ledgers. Like, that's not real, is it? Like, that's as real as it probably gets, but I'm hoping that there are better ways to do that in the future.
Perfect. All right. Thank you both so much for your time. Does the audience have any questions that you guys want to ask for our lovely panels? No? All right. If not, then thank you guys for coming along. We'll end it here today.